The Indian stock market experienced a significant blow today as the broad market indices, which is Nifty and Sensex, both plummeted by around 3%. What's even worse is about 18 lakh crore of investor wealth has been wiped off due to the decline. This sharp correction has sent shockwaves through the market, leaving investors shocked and concerned. So without any delay, let's understand what exactly is happening to the markets and the factors behind this decline. Firstly, let's look at the global factors. The US labor market sparked some real concern in the markets. Most of the data points came in worse than expected, painting a picture of a slowing US labor market. If you see the image on the screen, employers added only 1,14,000 jobs, below expectations for an increase of 1,75,000. Moreover, the unemployment rate rose to 4.3%, above economists' expectations that it would be unchanged on the month at 4.1%. Additionally, the ISM manufacturing activity fell in the US to 46.8%, an 8-month low, indicating that the US factories were still in a downturn. All these factors are raising concerns of a recession in the US, with Goldman Sachs increasing the odds of a recession. Another factor is the hike in interest rates by Japan to 0.25%, which happens to be the second hike in 17 years. Now let me explain this. Since Japan had kept interest rates nil or very low, it had given investors the opportunity to borrow and invest in overseas markets like the US, European markets where interest rates are higher. Now, with the Bank of Japan hiking rates and the US expected to cut rates, it has caused a lot of pain to forex traders employing the strategy, causing a further disturbance in the global markets. This rate hike led to Nikkei 2025 declining by a massive 12%, the biggest decline since 1987. Furthermore, the USD JPY exchange rate has witnessed a slide from 162 to the current levels of 142, thereby strengthening the yen. These weak sentiments raised concerns for other economies too, which experienced a global sell-off. The recent rally in the global stock market has been driven mainly by the consensus expectations of a soft landing for the US economy. In context, a soft landing is a balancing act of inflation brought under control without causing job losses or significant decline in economic output. This expectation is now under threat with the fall in job creation, sharp rise in unemployment to 4.3%, manufacturing activity falling to 8-month low, inflation above the Fed's target of 2%, and the slowdown in economy, and so on and so many factors. Tensions are rising in the Middle East after the recent assassination of Hamas political head, creating a state of panic. And now Iran has vowed to take revenge with several threats and provocative actions from both sides, indicating fears of war. And any escalation of this in the Middle East would send oil prices surging. For India, on a larger scale, it would increase our import bill as we import oil for our needs. But it would also have far-reaching effects and trigger a sell-off on oil-based sectors like automobiles, transportation, aviation, paints, tires, cements, and chemicals. All of these factors led to investors booking profits in their holdings, briefly leading to the market plunging. Moreover, the steepest declines were witnessed in the segments of small cap and mid cap segments, which declined up to a steep 4%. According to Trendline, the current PE of Nifty stands at 23.1, which is above the 2-year average of 21.9, suggesting overvaluation of the index. Furthermore, overvalued sectors like defense and railways, which have witnessed liquidity flows, are expected to face further pressure. To conclude, while the current market situation is undoubtedly challenging, it's essential to remember that market cycles are cyclical. Periods of decline are often followed by periods of recovery. And don't forget, India is positioned to be the fastest growing economy once again for fiscal year 25, with several agencies projecting our GDP growth to be between 6.6% to the upper band of 8%. So don't panic and focus on the long term to create wealth. Having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.